what is the difference between structural anomaly and logical anomaly. A structural anomaly is something that makes the profile shape weird. Let's say this was a profile, actually it's a composite profile, but let's say this was a profile. What you can see here is that there are a few structural anomalies. First, there is this small ledge kind of a development, because then you have a sharp area of rejection where market did not want to stay. But it's not gradual like this. Like here you can see that there is a gradual decrease in volumes as you move or approach the extremes. Here it is not. So this is a structural anomaly. Then there is this weird dip in between volumes. It's not a double distribution kind of a development where it gradually reduces and gradually increases. It is a sharp dip. Again, this is a structural anomaly. And then there is no smooth reduction in volume as you approach the other end. So this again is a structural anomaly. This is called as incomplete profile. This is a nice complete profile. You can see gradual reduction, but here it is a sharp drop. So all these are structural anomalies. I am not a big fan of those. What I am a big fan of is this. This is a logical anomaly. What it means is that markets are trying to go lower. Here you open lower, then you get quickly rejected and you extend the range to the upside. Fine. Market should continue to move higher because it has discovered that there is no business to be done on the lower side. There is a quick rejection. But it comes back down and spends time forming an overlapping to lower value area. My question is, if market just wanted to go lower, it opened lower, it went below previous day's low, why did it go back up? Okay, it was a rejection. Then why it did not continue? And when it is not continuing, it has chosen not to continue, not to go higher, it left behind this IBRX to the upside, which is a nice development if you are moving higher like it happened today. We have IBRX to the upside. It's a nice development, but it leaves this development, it confuses us that it opens lower, leaves an IBRX to the upside and then again comes down. Now, okay, fine. If this is rejection, like this is a rejection, this is also a rejection. We went higher, but we are coming back down again. Then it should come down and it should tag IB low. Why? Because if the trend is down, value is forming overlapping to higher, we have rejection at higher levels, it should continue extending the range to the downside. It did not do that. What in fact it did was went higher and repaired this anomaly and in fact gave us a spike. And on next day we developed a nice value area inside this late spike. So what it tells me is that there is business to be done to the upside. And that is the reason why we are above this last point of supply. There is this low usage zone and we are comfortably spending time inside it. And probably once this area is taken care of, we might resume the up move or we might come back down. So that remains to be seen, because now we are kind of entering in a zone where it might balance logically. This is a logical anomaly where logic states that if you are trying to go lower, we should have IBRX to the downside, subsequent range extension to the downside, value area developing to the downside. Here we have rejection at the bottom, fine. Then this IBRX makes sense, but then it again comes back down. It does not extend the range for a long time and it forms overlapping to lower value area, and that is what made this an anomaly. And that is why when it formed, I did not immediately think of it as an anomaly. Only when it was quite late in the afternoon that someone pointed out to me that, okay, Dean, is this the anomaly that you were talking about in your video? And then it struck me, yeah, it actually is an anomaly because it is doing some logically inconsistent behavior here. So whenever you find a behavior which is logically inconsistent, you can call it an anomaly. Alright. So, and as I keep monitoring the markets, I will keep highlighting it for you as and when we see some logical anomalies developing on the charts. It might not be very easy to spot. There cannot be a mechanical set of rules which you have to follow to identify a logical anomaly. Logic is fluid, right? It has to be. It cannot be set in stone, because if you want a cause and effect relationship, you need to understand that both cause and effect, they change. So the causes will change in 100 different directions. The effect it causes will change in 100 different directions, and you need to understand that even the magnitude won't be the same. So sometimes a certain cause will give you a certain effect. At other times, a certain cause will not give you the desired effect. It will just result in some sideways development. It's a fluid thing, but the day you start getting it, like I'm being very honest here. when this development was happening, I was absolutely unsure about what trade to take. Not until I was made aware of this anomaly that I got extremely confident, and I immediately established a trade, shared it within the Discord. So I did not even wait for the second check-in that we do usually to start. I immediately established a trade because it became immediately clear to me that yeah, this is an anomaly. It tells me that the sellers are not doing a good job. They have to come higher to check about this, and the kind of follow through we have received, I said yeah, fine. And one more thing, I mean, if you are observing this, you will find out. Someone even said that when I asked a question, what kind of information we get from this composite profile, and it was a double distribution trend day. But in fact, it went lower and it again formed a balance. So basically, this 3-day composite turned into a multi-distribution trend day, which is not good. And now we are kind of repairing one after the other, one HVN after the other. So we repaired this, and now we are moving towards this. Okay, so that is how I look at the markets.